This is a third part of our discussion videos about the gross income, and in this video, we'll discuss more on the computation of business income. Okay, so if you're ready, let's start. So in this video, we'll focus our discussion on the business and professional income, and I know these topics are already familiar to you because we have already discussed computation of the of business income in our previous videos on the accounting methods and accounting periods. But in this video, focused more on the computation of the business income, particularly the gross income. So, business and professional incomes arise from the sale of goods and services or the exercise of a profession. So, it is not really necessary that a taxpayer is always an employed taxpayer or a taxpayer is an employee. Okay, so there are some instances, or there are many instances wherein the taxpayer is self-employed, meaning he is doing business on his own, or perhaps he is engaged in the exercise of his profession, especially if his profession is valuable, like being an accountant or an engineer or an architect or a lawyer. So, or perhaps a combination of the sale of goods and the sale of service. So there are also instances wherein the taxpayer is engaged or is earning both from the employment and from the exercise of his profession, like what I did, like what I'm doing. Okay, so there is a mix income sources from these taxpayers, and this calls for the different accounting methods on the part of the taxpayer. So, whether an individual or corporate taxpayer, business income or professional income may include the sale of goods. So, it could be if you are engaged into trading or merchandising or manufacturing, that is considered sale of goods as business, or the sale of real properties as a real estate developer, or a sale of service such as leasing business or professional firms such as in a lawyer or an accountant do or having their own firms and so on, or a security agency or a manpower agency. So these are a sale of service. So recall that you have already learned the different accounting methods and periods in our previous discussions, right? So there are several accounting methods used in accounting for business incomes. So those methods that we have discussed already, we will need those methods in the computation of business income for different classes of taxpayers. So, for example, if the taxpayers engage into sale of goods, such as in manufacturing, trading, or merchandising, then we will need the accrual base of accounting. And then if the taxpayers engage into sale of service or in the exercise of his profession, then we will need the cash base of accounting. However, there are also instances wherein the taxpayer is engaged into the sale of properties, like a real estate developer. Then we will need the percentage of completion, if perhaps, or if the taxpayer is engaged into sale of goods but the collection is extended over several years, then perhaps installment reporting is applicable or the deferred reporting is applicable. So those accounting methods we have discussed already in our previous video are actually related in this video, the computation of the business and professional incomes. So I hope you have already mastered those methods and techniques so that this discussion will be easier for you. Okay? So, individuals engaged in business or practicing their profession may deduct the cost of goods sold or cost of service from the gross sales or gross receipts to arrive with gross income subject to tax. Again, in this video, we are focused on the computation of the gross income derived from business. We are not yet discussing the net income, okay? So we are still on the gross income part. So if you'll imagine the income statement, okay, just try to imagine the income statement. So in the income statement, we have gross sales, we have gross income, we have expenses and net income. So we are just in the halfway of the income statement, and that is the gross income. So we are still um doing this step by step. so that you will understand how to compute the gross income from business. Okay, so in your other accounting subjects, this may have been discussed already, but for the enforcement in this video, we'll discuss how to compute the gross income. Okay, so other operating incomes which do not arise from the normal business must also be added to arrive with gross income. So there are situations or scenarios in a business wherein the business would earn an income other than the regular normal operation of a business. For example, if the business is engaged into sale of goods or merchandising or manufacturing, and then on a casual basis, one-time basis, it earns something other than from its normal operation, then that is considered as other non-operating incomes. These other non-operating incomes are also considered in our computation in the gross income. Okay, take note of that. So these other operating incomes these are incomes not arising from the normal business operation, such as gains derived from the sale of assets. So for example, again in our previous discussion, um, for example, the taxpayer is engaged into real estate developing or realty business rather. So the company is selling properties, and then it has this one property, okay, that is not part of the normal inventories or not really a real property which is considered as inventory, but it sold this asset. Okay, so any gains derived thereon from the sale of such asset is treated as a gain, which that gain is subject still to tax, and that is added to our gross income. These are considered as other non-operating incomes. So we have this sample or pro forma computation on how do we compute gross income for merchandising business. This pro forma computation is actually familiar to you already because you have discussed this already in your basic accounting. So in merchandising business or trading business or manufacturing business, we will be using accrual basis again because this is a sale of goods. So how do we compute in gross income? First, we have the gross sales. This is the total sales, whether arising from credit or cash. Again, that is considered as a sale in our computation of the gross income. Then we will deduct the discounts availed by the customers. Take note of the word availed by the customers because in accounting, there is a possibility that the business will grant an estimate of, let's say, discount. It will just estimate on giving discounts. So for example, the business is giving 2% discount, although it although the customers have not yet claimed these discounts, but some accounting standards would prefer to use estimates and deduct these discounts even if not yet availed by the customers. For taxation purposes, however, we can only deduct discounts if and only if these discounts are not subject to any condition. Okay? Meaning to say that these discounts are deducted from the moment or from the time of sale. This discount actually refer to the cash discount. Remember, we have two kinds of discount: the cash discount and the trade discount. So again, it's only on cash discount. Okay, if the customers will be given, let's say, 2% discount if they will pay on cash, then that is considered as a discount deducted. So any discount not yet availed by customers cannot be deducted from our gross sales for income taxation purposes. So after we deduct the discounts, we will get the net sales. And from then, we will deduct the cost of goods sold, which is the beginning inventory plus the purchases and the discounts availed from suppliers. Like the discounts availed by the customers, these discounts availed from suppliers is the actual discounts that we have availed from our suppliers. So if the supplier would give us 5% if we would pay on the 15th day, or on or before the 15th day, but we have not yet availed the discount, then that discount cannot be deducted in our purchases. Again, we can only deduct these discounts if we have actually availed these discounts. So we get the goods available for sale. And from that, we will deduct our ending inventory. So we get the cost of goods sold and the gross income. Okay, so this is just the half part of the income statement because again, we are still on the gross income side. Okay, so expenses will later on be discussed in our succeeding videos, but again, we focused our discussion in this gross income part. So this is our pro forma computation if you are into merchandising business or trading business. However, if you are into servicing business, the other formula would be um, considered. For example, if you are into servicing business, we will be using cash basis, of course. So servicing business like we have leasing or we have construction companies. Okay, so again, as for cash basis, we will report only those uh, payments that we have already received, regardless of when we render our service, regardless of how much is earned. Okay, our basis in declaring receipts is the cash collections. So, for example, if we are a business engaged in a servicing business, okay, and we have this customer that have paid in advance, even if the advance payment is yet to, the service is yet to be rendered, but since there is already collection, we should report that as a whole. Okay, we should report the whole amount in our income tax return. Again, it might sound confusing to you because in accounting, we are we used to account this on accrual basis, right? But again, for taxation purposes, we based on the collections or the receipts. Then we will deduct if there are discounts availed, same as what I've discussed, only those discounts availed by the customers. So we have the net receipts and we will deduct the cost of service. So the cost of service would include the labor, direct labor, the materials, and the overhead, such as depreciation directly used for the service. So if, for example, if you are engaged into, if you are in a barber shop and then whatever payment you made in your for your barber or for the labor, then considered as a cost of service. For materials, we have, for example, the medicine used, for example, and the depreciation of the equipment used in the service, in rendering the service. So we'd get, we also have other direct costs. So total of cost of service, and then we will get the gross income for our servicing business. Okay? So always remember, for cash basis, we based only on the actual gross receipts, actual cash collections, regardless when these are actually rendered or earned. Okay? Now let's take a look with this problem. The company the company engaged in merchandising business had the following data during the taxable year. So it had gross sales for the year of 2,500,000 pesos, and then discounts granted to customers of 100,000 pesos, but only 60% of this amount have been availed by the customers, have been actually availed by the customers. We also have the beginning inventories of 400,000 pesos, purchases made during the year of 1,203,000 pesos, and then the freight in shouldered by the company in its purchases. So we have 20,000 and ending inventories of 270,000. So our task is to compute the gross income of the company. So actually this problem is very easy because it's a merchandising business. It is using accrual basis, and we are used to, you know, solving problems like this in our accounting, right? So accrual basis. So our solutions would include, first, the gross sales for the year. We have 2,500,000, and then we will deduct the discounts availed. However, remember that the discounts given is 100,000 pesos, but we only deduct the 60,000 pesos because this is the actual discount availed by the customers, that is 60%. So we have net sales of 2,440,000 pesos. Then we will deduct the cost of goods sold. To compute the cost of goods sold, we have beginning inventories of 400,000, and then we'll add the purchases made during the year. The purchases, by the way, can be on credit or in cash. It depends because, again, since it's a merchandising business, then this is using accrual basis. Okay. Then we'll also add the freight in shouldered by the company. So that is 20,000 pesos, a total of 1,670,000 pesos. This is the total goods available for sale. Okay, so after we computed the goods available for sale, we'll also deduct the ending inventories to get the cost of goods sold, that is 1,400,000. So this cost of goods sold of 1,400,000 shall be now deducted to our net sales of 2,440,000. Therefore, our gross income will be 1,000,000 pesos, 1,040,000 pesos. Okay, that's how easy to compute the gross income for business and professional incomes. So there are a lot of scenarios or situations that could be, discussed in this video, but I prefer to use this simple problem because you have already learned in our previous videos about the computation using installment basis and deferred reporting and then percentage of completion. So remember all the, and I hope you master those methods, accounting methods in our previous discussion, because those will be very useful in the computation of the business income. Okay? So I hope you learned something from this video, and I hope you watch the next video. Thank you for watching.